Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So welcome to a new week. Hello, Wilbert. Thank you for joining this session. So today we'll be taking an overview of the key events that will be happening in the markets this week. And at the same time, we'll try to understand the technical analysis, how these events might affect the markets. And once we understand that, hopefully we'll be able to approach the markets from an informed perspective. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and this will confirm that everything is working just fine. So as I wait for your response, then you should also know that these sessions do not represent any form of investment advice. Neither are they a recommendation to trade. So you should always do your own research, your own due diligence, and practice proper risk management. So hello, Molenga. Hello, Mana. Thank you guys for joining. Hello, Isaac. Hello, Rosary. Thank you for joining. Hi, Ibrahim, GK. I think we have started on the right energy. And congratulations to the Ivory Coast team for winning the Africa Cup of Nations against Nigeria last night. So we are starting on some very good elephant energy. So let's get things started. First things first, I will be looking at the economic calendar and trying to understand what are the key events for the week. So as we all know, if you took your time over the weekend to cover the key highlights that you're expecting for this week, then we know that it's something that you can summarize and say that this is the CPI week. So this is the week that we can see the level of US inflation, and I believe that that will be the biggest event of the week so far. So as for today, there's a bank holiday in Japan, so we expect low activity from the UI pairs. Then we had a speech from RBNC Governor Adrian Orr. This is the South Bank of New Zealand. We also have a bank holiday in China. Remember, China is celebrating the Chinese New Year, and the celebration usually takes 2 weeks. So we might expect to see some reduced market activity from the Chinese side over the next 2 weeks. But then we still have other events happening for the day. So first major event will be at 5:20 p.m. and this will be a speech from FOMC member Bauman. Then at 8 p.m. we'll have another speech by FOMC member Barkin. Then at 9 p.m. a speech from Bank of England Governor Bailey, before we look at the federal budget balance of the US at 10 p.m. So clearly, today being Monday, we are mainly focused on speeches. So 3 major speeches from 2 US central bankers and 1 England central banker will be the key market drivers for the day, despite besides the prevailing trends that emerged last week. So as we head into Tuesday, we'll be expecting to see inflation expectations data from New Zealand. So there will be a lot of inflation data all over, but I'll try and highlight the main ones. So inflation expectations are very important data that is used by central banks to make policy decisions. So in this case, at 5 a.m. tomorrow, we expect some volatility in New Zealand dollar pairs. So we'll get preliminary machine tool orders in Japan at 9 a.m. So these are leading indicator of economic activity in Japan, especially considering that machine tools are basically a big part of their exports, and it's a key economic driver for Japan. Then we'll get the jobs data from the UK, ranging from claimant count change, or basically the unemployment claims, then average earnings index, which is a wage growth, and then the unemployment rate, which is expected to have moved to 4.0%. Then we get another inflation report yet from Switzerland. This will be a measure of the Swiss inflation rate. Then in the afternoon at 4:30 p.m., get US core CPI. is a measure of inflation without food and energy prices. We will get the monthly CPI and, of course, the year-over-year CPI. So there is an overall expectation that this inflation will be dropping to 2.9%, which might be consistent with the Fed's expectations. And this may explain why we are seeing a much weaker dollar since last Friday. So if inflation is subsiding in the US, basically moving towards the 2% target, it means that the Fed will not be in a hurry to cut interest rates. Will not be holding interest rates higher for longer. Remember, the reason the Fed is holding interest rates higher is because inflation has been on the rise, and in the last time it moved from 3.1% to 3.4%. So if you are to visualize this, you can see the small increase from 3.1 to 3.4%. But then, if we happen to see January inflation dropping to 2.9%, that would be in the direction that the Fed is expecting. And as a result, we might see rate cuts, and rate cuts mean a weaker dollar. So this is a key driver of the dollar direction. I think it will be the most important event of the week. So we also be getting inflation data coming in from the UK. So this one will be happening on Wednesday at 10 a.m. So in the previous reading, we had 4.0%. We expect a slight uptick in inflation, 4.1%. Whereas core CPI is also expected to increase from 5.1 to 5.2%. So higher inflation would mean that the Bank of England continues holding the rates higher for longer. And as a result, it would be a key determinant of the direction that the pound takes for the rest of the week. So it will be a key trend indicator for GBP pairs. So if you are a fan of trading GBP pairs, then this will be very important in determining market direction. So we also be looking at other inflation indicators, such as the producer price index, the retail price index, and so on. We also be getting the housing price index for the UK, and all will build a picture of the direction that the inflation is taking in the UK. So a major speech from Bank of England Governor Bailey at 6 p.m. on Wednesday, then jobs data from Australia, GDP data from the UK, an indicator of economic growth, a speech from ECB President Lagarde, and then on Thursday, we get retail sales data from the US. So retail sales data is basically a measure of consumer strength. When people have more money, more jobs, more income, they tend to buy more stuff. So when you track the retail sales data, you're able to estimate the purchasing power within an economy, and this can tell you quite a number of things. So first thing first, if people are buying more stuff, it means they have more money, they have more confidence in the future performance of the economy, and as a result, it tends to be inflationary. But then if we see retail sales weakening, then that would be consistent with the Fed's expectations, and that would continue leading to the weakness of the dollar. But then if there's stronger retail sales, then there's a likelihood that that will not be consistent with the Fed expectations. And as a result, we could continue seeing a strong dollar. Then on Friday, we get more retail sales data from the UK, and then core producer price index for the US, which is also another inflation measure. And once we go through this, we end the week with preliminary University of Michigan Consumer Sentiment Survey. So those are the key highlights on the economic calendar front. Then on the other side of earnings, we'll also be getting some more data. So if you have any questions, just type that in the live comment section. I'll be responding to that as well. So on the earnings calendar, we have quite a number of key highlight stocks that will be announcing their earnings this week. So on Monday, which is today, we don't have any major companies making announcements. Maybe Monday.com, Principal Financial Group. I think small banks are quite volatile in the US right now, so it's something you might want to consider. These are Zoom Info, as well as a waste management company. But then from Tuesday, this is when we start seeing the real kicker here. So we'll be seeing Airbnb reporting its quarterly earnings. There's Akamai Technologies, which is a very important company for cloud security infrastructure. American International Group, or AIG, majorly in insurance. Biogen, Coca-Cola, we'll be getting data from Datadog. Ecolab, we'll also be getting earnings from GoDaddy, Hasbro, Hawaiian Electric, Instacart, among other tech companies such as Lyft. We'll also be getting Robinhood Markets. So I don't think there's a shortage of tech companies that will be reporting earnings this week. These could bring in some much needed volatility in the markets. So we also be getting TransUnion, Upstart, what's called Welltower, and so on. So Welltower is among the top real estate companies in the US. So you might want to check that out. Then on Wednesday, this is when we get the first big earnings of the week. This will be Cisco Systems. So other companies that will be reporting on Wednesday include CF Industries. This is a big company in food supplies in the US. Shelves Warehouse, CME Group, among others. Then you might want to consider checking out Twilio, TripAdvisor, Tower Semiconductor, and so on. Then on Thursday, we look at Coinbase Global. Coinbase was one of the top performing stocks. If you look at Coinbase stock, just to give you a highlight, in the last 1 year, the stock is up 151%. And this is mainly because after the top that we saw in December, the stock continued dropping for the better part of January. But for the better part of last year, it's up triple digits. So in this case, we would be seeing a continuation of the same. And this really depends on the earnings that the company will be reporting this week. So we also be getting earnings from DraftKings. Other noteworthy companies include Applied Materials. Applied Materials is one of the stocks that have performed really well in the last 5 years. So you might want to check that out. John Deere, agricultural equipment, might be something in your book. DoorDash, Dropbox, we would also be looking at just a minute. Yeah, we have Roku, a big company in video streaming. Then, of course, there's other select earnings such as Wendy's, retailers, as well as Yelp and Yeti Holdings. So Friday, we see the number of earnings reduced considerably. So I think the key highlight here would be Treehouse Foods. And this would also bring in much volatility as we head to the end of the week. So as you can see also from the earnings front, we get to see a large number of companies reporting their earnings. Remember, some of these companies are part of the indices that form the part of the US stock indices, including the S&P 500, the Dow Jones, the NASDAQ 100. And if these companies report big, weak, or earnings as expected, then it could have material impact on how the top indices are also performing in the markets. So I expect to see some much needed volatility, especially considering that US equity indices closed on a high last week. And I think that's where we start with our technical analysis. So the first asset I want us to focus on is the NASDAQ, having closed above this resistance last week, continued pushing higher and close to a high. So a new all-time high was seen last Friday. And now, as we start the new week, you can see the market attempting to even higher even before we have any news impacting the markets today. So there's a good likelihood that this strong momentum continues. So from the daily chart, you can see it has been a one-way traffic. And this is since the beginning of November last year. So month over month, we have only been seeing gains happening. And this would continue throughout the month of February as the stock market continues being resilient and strong. So as for the Dow, I think there was some form of red flag in the last 2 weeks. And the red flag is easy to notice. So the market makes an early rally at the better part of the week, and then a sudden drop before making a recovery, a drop, then a recovery. So last week it happened again. We started with a sharp drop, market recovered, a sharp drop, another recovery, and then sharp drop towards the end of the week. So these big bursts of downside momentum are quite worrying, and it's something you should now start considering seriously because it could be a sign of weakness in the trend. So on the daily chart, this is how it looks like. So you can already see the candlestick that we saw on Friday last week was already warning, indicating that higher prices are currently being rejected on the Dow Jones Industrial Average. So as for the S&P 500, all we are seeing is a strong momentum, and we managed to reach $5,000 per share of the S&P 500 for the first time ever. And now you can see that after the market hit that area, the price has maintained at that level. So we are at 5,005, and there's a good likelihood we would continue seeing more upside. But then the higher the price goes, the higher the possibility of a reversal. So, well, it's good to continue enjoying the bullish momentum. It's always better to buy on the dips or to wait for evidence of sellers entering the market. So for now, I don't think it's like the best idea to buy trade. But then if there's a pullback, then it represents a better opportunity for re-entry. So we have seen this happen over and over. For instance, these pullbacks here, there were good entry points. This pullback here was a good entry point, but then buying right at the top is not always the best idea. So the other key thing I would say we need to consider this week is the dollar index entering into this territory, which to me looks like some form of pennant. For those who don't know what a pennant is, it's more of a triangular flag, usually common in marketing campaigns. So when you see such a momentum in a chart, after the market made an almost straightforward move, then this can be considered as our flagpole, this being the pennant. And at some point, I expect to see some form of breakout happening on the dollar index. So the breakout may as well depend on tomorrow's news, that is the CPI news, which would likely determine a direction for the US dollar index. So a strong inflation would mean that the rates stay higher for longer, and in that case, we see a strong dollar index. But then if inflation subsides, let's say towards 2.9% below, then in that case, we could be seeing a much weaker dollar and perhaps a breakout towards the lower side. So that's the key idea I'm thinking about going forward for this week. So if the dollar index was to break downwards, of course, it would be weakening across board, so we can find stronger currencies to pair that with. And if it breaks upwards, being strong, then we look for weaker currencies to pair that with. So for USD JPY, we have been discussing this recovery that started this year on January. Then as we enter February, you can see the continuation. We've already broken January's high. So January's high was around here. Then the market dropped, made a recovery, cruising above this resistance. So for the entire month of January, you can see the breakout here. Market pulls back and then continues pushing higher. And now there's a likelihood we could be seeing some even higher prices. But then, as of now, since the market is pricing in a potential weak inflation data, then the overall trend seems to be a much weaker dollar. And now you can see the yen regaining against the US dollar. So it seems like the trend for Monday. So I think if you are an intraday trader and you're looking for trades today, there's a likelihood you will be seeing a much weaker dollar compared to other currencies. And in this case, this may explain the pullback. But for the long term, let's say for the better part of the week, the overall expectation is that the dollar continues strengthening and gains towards this area against the yen. So for Euro USD, it's still the same story. we have seen the euro continuously retest this area as a major resistance. So before that, it was a support level and now being a resistance. We saw the market rejecting this area on Friday, and now the current price action as we enter the London session, it seems like the euro is now beginning to weaken to the dollar, or the dollar is strengthening against the euro. And if the market was to cross this way, it would be an outright signal to go for a short trade, perhaps towards Friday's low or even last day's low. So this is something to consider, especially if the market closes at that level. So if this candlestick closes this way, then this is evidence enough, bears entering the market, and perhaps reason enough to start looking for short selling positions here. So for pound USD, it seems to be a similar case, facing a major resistance. The candlestick is not big enough to convince anyone to go for a short selling trade, but then we be patient and wait for the market close. So from USD CAD, we're seeing the dollar make an impressive recovery here against the Canadian dollar. So from the forward chart, you can see the reversal that happened last week. And now there's a good likelihood we'll be seeing some form of continuation higher as the dollar regains some of its strength. So as for gold, this is what we are seeing, the market testing the lower trend line. As we mentioned last week, the idea for identifying the best opportunity in this gold chart pattern is trading the breakout. Market will not remain within this triangle forever. At some point, we'll be seeing a breakout, and once the breakout happens, then that would likely present a good momentum trade. So an easy way to get targets using the base of the triangle here. This is the highest price, and this is the lowest price. So a break towards the lower side would likely drop to 1973, and a break towards the upper side would likely rally to 2087. And this really depends on the strength of the dollar, as well as the geopolitical climate. Remember, if there is a sudden uncertainty in the market, then gold tends to rally. But then without that, then we trade this against the dollar. So if the dollar happens to strengthen, then gold breaks downwards. And if the dollar weakens, gold breaks upwards. And these are the two targets for the week, depending on which direction the price of gold takes a break. So AUD/USD, after breaking towards the lower side, has basically shown us another sideways range. So we are not seeing a market that is making strong unidirectional movements. Rather, what we are seeing is the market forming yet another consolidation. And now we have to be patient and wait until we see yet another breakout. So we have covered the US equity indices. This is oil, which was very strong. We expected the oil prices to hit resistance here and start moving downwards. But then what we saw last week is the price being super strong, and we identified this other resistance area here. So this was important for oil traders last week. And as the market rallied higher, goes to this area, it has really struggled to break that area. And now, as we enter a new week in the London session, what we are seeing is a strong reversal in oil prices after, I would say, a strong 5-day rally last week. So in this case, there is the expectation that we continue seeing much weaker oil prices and perhaps a drop to $80.325 per barrel suffice for one day's trading. So European equity indices, what we are seeing here is a strong bullish momentum, but well anchored between the two trend lines. The market has not broken either of them yet, and the two trend lines are approaching each other, which basically implies a rising wedge. So at some point, we expect to see some form of breakout, and the breakout could happen either side, maybe to the upper side, maybe to the lower side. And that's the real kicker or the real opportunity that you're waiting for. So here, there's no much opportunity to make a lot of money from this slow momentum. You want to enjoy a big momentum such as this one, which takes a small number of days to make such a huge price difference compared to this large number of days where there's a smaller price difference. In this case, waiting for the breakout would imply observing the price reaction to this trend line and, of course, the lower trend line. If there's a breakout, maybe there will be an opportunity there. So Bitcoin, being very strong on a very strong rally after breaking outside this trend line. And I think this is the key theme I've been discussing on these other charts. So you are in this sideways momentum, you don't make a lot of money, or you just sit on your hands, waiting to see the direction of the break. So market gives you a direction of a break. You can see the breakout here. And as a result, you are able to enjoy a strong momentum upwards. So this could be experienced somehow here. The breakout could be on the upper side or the lower side. I don't know the outcome. We just be patient with it. And now, with the strong momentum we are seeing in Bitcoin, there's a good likelihood that we could be seeing the price of 50K happening this week. So the highest price that we saw here, and this was towards the end of last year, was 48,955. This was on the 1st of November, on the 1st of November, yes. And now we are seeing the price going straight for the same level. So the price has not hit that area yet. And now you can see the price action this morning indicating some form of continuation for this particular trend after the strong pin-back candlestick here. So also, fun fact, something we have seen this morning and we have not seen it happen before was the US President, Joe Biden, basically adding lesser eyes to his profile. So you can verify that this is his profile. And from here, you can see that he made an early post this morning at 6:50 a.m. where he basically added lesser eyes, which basically signal Bitcoin. So I don't know exactly what he meant by doing this, but then there's a likely pointer that a lot of market participants might be taking this as a strong support for Bitcoin. So that's something to consider going forward. So besides that, France 40 index has continued to respect the lower trend line here. So we have seen multiple instances where this index has tested this trend line and not broken it. Every time it has done this, it has led to a strong bullish momentum. Maybe for 1 or 2 days, this is for 1 day. Then on Friday last week, there was yet another rejection of the price level, and the price is now rallying towards the previous high. And this is something that we saw on the 31st of January. So there's a good likelihood that the market will retest this area and eventually break it towards the upper side. That would be pretty bullish for the France 40 traders. So it's also important to notice that there's an emerging pattern, and the emerging pattern in this case is something we describe as a cup and a handle pattern. So for those who are not conversant with it, just think of the way you used to draw a cup. You are a kid, and you will get to understand the pattern so easily. So what we are seeing here is the market forming this cup here, then pull back, then a handle. This is often a continuation cut pattern. Then this represents a potential for the market breaking and moving higher, for forming yet another leg past the upper side. So that's something to consider going forward if you are a fan of trading the France 40 or the CAC 40 cash index. So last three, USD CHF. This is something that we saw breaking towards the upper side, a retest and a continuation. But then the market has not been able to accelerate higher from this area. Perhaps the likely outcome will be more fuel for the fire or more momentum once we see the US inflation report. So I would say this is more of a sideways momentum the last 4 days. Now we just be patient until we see both inflation reports for both Switzerland as well as the US, which are due in the economic calendar this week. So that being said, I'll be checking on your questions to see if there's any. Once I answer that, then we end or close the session. So hello, Job. I can see Willie, Lumbwa, Joe Manabasto. Should we expect the all-time highs to be the new normal. Yes, I expect that to continue for the foreseeable period. And the stock market is not being logical right now. It's not being based on fundamentals. It's heavily speculative. So when you look at companies like Nvidia, the multiples they are trading to their earnings, then you understand that the markets are no longer following fundamentals. They are highly speculative, which means that they are being driven by greed. And the opposite is also true, that once the greed is out, then they'll be driven by panic. And this basically leads to high volatility, high potential opportunity for day traders, but also increased risk due to the heavy speculation happening in the markets. So yes, I expect to see at least some one day forming higher highs, all-time highs this week. But then at some point, the opposite will also be true. So remember the Wall Street saying that bulls climb up the stairs and the bears jump off the window. So while the market may be struggling to move higher, when it comes to the opposite, it's going to be happening real fast and quick. So when prices are crashing, they tend to crash faster due to panic. So hello, Gitao, J-Sport, and Edward. How much Bitcoin do you need to retire? Bitcoin is a savings tool. You use it to save value so that you can use it for a future value. So I don't think really two different people have the same financial goals. So it really depends on what you want to get in your retirement. So if you just need a condol, then you should be looking for enough Bitcoin to buy you a condol, and that varies from one person to another. Do you trade Bitcoin the same way we trade the market, buy low and sell high, or you hold it will appreciate? So if you consider Bitcoin as your long-term savings, then you save it for long term. But then if you are a day trader and you have a separate account for your day trading activities, there's nothing wrong squeezing a nice position, getting some pips out of it. But then for long-term savings, make sure that you don't trade that and you keep that separate, where it's safe and you can use that for at a future date. So for your consideration, can you consider the topic of how wars affect financial and crypto markets? The Bullish Banter podcast. Yes, we will consider that. Thank you for the feedback. Good morning, Martinez, Zambia. Tony, welcome to the session. Hello, Noel, Peter. Review for GJ and Cat JPY. I think this is the only request I've seen. So we cover one and we end the session. So for pound yen, this is it. This is something we covered in the last 2 weeks. The market would pull back, get somewhere around this level, then rise back to the same resistance. So the market dropped, didn't quite get to our target. If you zoom out the chart, see how you are using that area, most of these two previous highs. So the market got to this area here. Notice that it didn't bounce exactly at the same level, but then immediately after getting to that area, there was a bounce, and then a continuation last week. Eventually, we go to the previous highs. So we are starting trading the pound yen at a major resistance. And from the price action I am seeing here on the 1 hour chart, it's more indicative of bearish momentum than bullish. So if you think of these as a range that lasted, let's say, slightly over 24 hours, you can see that attempts to move prices higher are met with strong resistance. And now the market has already tested the low that we saw on Friday. So breaking below Friday's low will basically be a very strong indication that the market is now headed back downwards, and that might represent a short selling opportunity. In this case, the risk profile is not much big. So I would say if you're going for a short here, with a stop loss just above this area, then the potential would be 1:2 or even 1:3, depending on the price action we see this week. So it seems like a playable idea. I would be more patient to see how the market reacts on yesterday's low, not yesterday, but Friday's low. So if the market happens to close below this, then that would be a key indicator that the price has reversed and now we're headed much lower. So that's it for the day. Thank you very much, guys. Thank you for your time. Remember, each day, each week we have a podcast. It's available on all podcast platforms, so make sure to listen in. And also, it's available on FX Pesa YouTube. And remember to follow and like the FX Pesa channel. So we can begin by just liking this video, and that will be more than I can ask for. So thank you very much, guys. See you on the next session. Is it a must to use 1 hour time frame to know the trend movement or about sideways? No, you can use multiple time frames. But remember, no matter how many time frames you use, you're always looking at the same price. So it's only what changes is the size of summaries you're taking. Thank you, guys. See you then.